You know, I'm always honest with you guys, okay? I hope you guys know that. And take this for what you want. Tesla's chart looks exceptionally bullish. It looks like Tesla's stock wants to go buck wild to the upside. I mean, take a look at this beautiful setup we have for Tesla. I mean, what's not to be excited about? Well, here's the problem, okay? We're heading into next week. Next week has a lot of implications. And honestly, you know, just to be fully honest with you guys, I've been in the markets for a long time. And it's pretty rare that I'm just like, I don't have a decisive conclusion on what to expect next week. Like I have a strong understanding of next week, of the importance of next week, but I don't know how certain things are going to play out. So I don't have a strong thesis on, up or down. Let's just call it that to keep it simple. If markets are going to go up or if markets are going to go down. And what effect that'll have on Tesla can be dramatic. I mean, Tesla is, my opinion, the most interest rate sensitive company there is. As soon as the Fed cuts rates, Tesla is going to take in more money to the bottom line, because they're buying down the interest rate right now. So on top of people able to buy a Tesla cheaper and mega packs, let's not forget that, the most profitable segment of Tesla's business, the fastest growing area of Tesla's business, mega packs that are $2 million a piece. Like, those are heavily financed products, okay? They're going to benefit a lot from rates falling. The entire Tesla business ecosystem is going to benefit. And Tesla's going to take in more money straight to the bottom line. But yes, Fed cuts sound great in theory, but it may not be short term. Now, longer term, by the end of this year, I think Tesla is going to be in a much better place and things are going to be fantastic for Tesla, as long as the economy is not in some kind of recessionary environment. But in the very near term, we're probably going to get a sell-off. Now, that just sounds crazy to me, because look at what you've seen on Friday. Precisely the areas that will do well if markets went higher did well on Friday. Like we did kind of price in that soft landing, 50 basis point cut from the Fed, and things looked good on Friday. But coming next week, everything changes. And I don't know if it's just me. I don't know if I'm an econ nerd or if I just love this stuff too much. But this feels like Christmas when you're like 10 again, okay? You are starting a brand new cycle. We've been in this hiking cycle since 2022. It feels like it's been forever. And now we're getting to the first Fed cut. In the short term, there is a history of markets selling off. I want to make this very clear. Longer term, 2, 3, 4, 5, 6 months from the first cut, the only thing that matters is the economy. But in the very near term, it's all about what the Fed says, Jerome Powell really, what Jerome Powell says, how Jerome Powell says it, and what the dot plot says. 25 or 50 basis points does not matter. And let's clear the air on that right now. We're going to get a 50 basis point cut. That's obvious. Nick Timmerhouse came out Thursday night as markets were pricing in a 14% chance of a 50 basis point cut. It was not priced in at all. Nick Timmerhouse article came out and the Fed funds futures markets moved like we just got a really, really good CPI report. Like a deflationary CPI report. The markets went from pricing in a 14% chance of a 50 basis point cut to 52% chance of a 50 basis point cut. Now, yes, that's technically over 50%. And if the Fed meeting had been on Friday, the Fed would have cut rates 50 basis points, because if you look at the Fed rate monitor tool is a free, totally free website you guys can look at to see what the markets are pricing in at any given time. It updates like by the minute. Okay, to see what markets are pricing in for Fed policy, it currently says 50% chance of a 50 basis point cut, 50% chance of a 25 basis point cut. It's about as good as something like Bloomberg. But nonetheless, over the past 60 years, the Fed has always done what is priced in by the markets. So whatever's priced in coming Wednesday, the Fed will do it. Now, yes, we need a bad retail sales number or a soft retail sales number. We need another article from Nick Timmerhouse, maybe Monday or Tuesday, to solidify that 50 basis point cut. But you don't see the bond market move like this for no reason, okay? The bond market is 3 to 5 times larger than the stock market, depending on the given time in history, and the bond market tends to be correct. You don't get one article that moves a projected Fed cut from 25 to 50 basis points from 14 to 50% for no reason, okay? That was a leak by the Fed. That was the Fed's way of swaying the markets during their blackout period. Now, again, whether it's 25 or 50 basis points really does not matter. I just want to establish, like, it's going to be kind of crazy if the Fed only cuts 25 basis points. And, you know, 25 or 50 could be seen as positive or negative. It really just depends on what the Fed says. If the Fed says, guys, we see a soft landing, we are on a path to neutral. If incoming inflation reaccelerates, we are in a position to stop the path of rate cuts. But for now, we see inflation falling, we see a soft landing, and we are cutting rates. That's going to be exceptionally bullish, no matter if it's 25 or 50 basis points. Don't be confused there. If the Fed says we're cutting 50 basis points, there may be more damage to the economy to come. We may or may not enter into a recession. We're watching things closely, and we will be there to help out markets if we do go into a recession. I don't care if it's 25 or 50 basis points. The markets are going to sell off. That's the confusing part about this week. Now, that's more of like the commentary from Powell's side, okay? What Powell says, how he says it, is going to be important. And really, if you just want to boil this down, strong economy, strong stock market. That's it. Strong economy, strong stock market. Weak economy, weak stock market. And what the Fed kind of leans the markets towards is going to dictate, you know, whether the Fed sounds good or sounds bad, okay? I think we kind of already, you know, established that. I don't even think the Fed is the main catalyst right now. I think it's really down to the economy. Like, if retail sales come in really bad on Tuesday, you're going to see a vicious sell-off. No matter if markets are bullish about the Fed or not. Vice versa. If you see a really good retail sales report, markets are going to do exceptionally well, even though that means likely you're only going to get 25 basis points. The Fed's kind of like a sideshow at this point. They are very important, I guess, in the near term for next week, for the week after, and the week after that. But over the next let's call it 4 to 12 weeks, it's all about the economy. And it will start to become about the election as well. But in the very near term, it's all about the Fed. In the medium term, it's all about the economy. So let's kind of establish that now. Part of the problem I do see with this Fed meeting this upcoming week is normally you do see a sell the first cut reaction by the markets, because it's normally better to be, you know, cautious as stocks are at all-time highs, and to kind of play the waiting game when it comes down to the Fed cutting rates. Because when the Fed is cutting rates, when the yield curve is negative or inverted and goes positive again for the first time, you're normally about to go into a recession. Now, we have a lot of economic data that suggest we're heading into a slower economy as well. Like, this would be the time to take your foot off the gas pedal and to be on the sidelines. At the same time, I think markets have a lot of FOMO. They are jittery. And there are areas of the markets that are pretty attractive. Like, if you consider this, exclude the Mag 7, 493 S&P 500 companies, they're trading at a PE around 15 to 15 and a half times. The average on the S&P is about 19. So there could be a lot of upside in certain areas. And that's what's so, I guess, specific to Tesla. Tesla can have a lot of upside here. And yes, it is it is a decent chunk of the S&P as well. It does have its place. It's like 4% of the S&P, 5%, maybe 4% of the S&P. But you could see Tesla, small caps, dividends, value companies outperform and do very well, but big tech sell off. That would be the playbook that you've seen on Friday. But the last time, let's not skip over this. I talked about this in the last video, so I don't want to really cover it too much here in this video. But the last time that you did see a cut from the Fed with a similar economy to what we have now, like there was some people in August of 2019 when the Fed cut rates 25 basis points that said, you know, there is a chance we go into recession. The economy is clearly slowing. You know, the Fed's cutting rates. That it was kind of the same economic argument as you are getting today. Now, unfortunately, we never found out what was going to happen because COVID happened in March of 2020. Yield curve went inverted, it uninverted. Maybe the bond market knew about the Rona before everyone else. Who knows? Okay. But long story short, you did sell off 7% in 4 trading days. That was a direct sell the news event in 2019 with a similar setup as we have today, again, economically speaking. But then what happened? You rallied back to about the same level you were at before, sold off about 5%, and then you had a very aggressive end of the year rally. It wouldn't surprise me if the economy actually, you know, stays roughly the same. Maybe things get a little bit better on the fringes, and you do see a pretty parabolic rally towards the end of this year. But I don't think it's going to be in big tech, which controls the broader S&P. I think it's going to be in the same exact areas that rallied on Friday. So if you're curious, you know, what's going to benefit the most from a bullish market, just look at what happened on Friday. Small caps. The Dow outperformed the S&P and the NASDAQ. Like the Dow outperformed the NASDAQ. That is a great area. Small caps, great area for that risk on behavior. Value, high-paying dividend stocks. You know, what a lot of people, you know, kind of fail to realize when it comes to dividend stocks, something that pays like 4, 5, 6%, that is a quality company that, you know, may or may not benefit from rate cuts. That's a benefit if it does, you know, get helped out by rate cuts. But as those stocks are paying 4.5 to 6% yields and their quality, they're safe, their dividends not going to be cut or anything like that. As money market funds go lower, as the Fed cuts rates, that's what will help boost those stocks up. Those stock prices will go up, their yields will fall in sympathy, okay? So that area is very attractive. Small caps, cyclicals, deep value, stocks that are trading at big discounts, pricing in a recession would benefit a lot. I mean, you kind of seen that playbook on Friday. Mortgage companies did very well. Small caps did very well. Dividend stocks did very well. Big tech did not. Apple was red, Meta was red, Amazon, Nvidia, they were all red. Google was up 1.82%, Microsoft was up 0.84%. Big deal. And they actually all sold off in after hours. Like, big tech is the last place I would want to be, and that's puts Tesla in an interesting position because Tesla is a very interest rate sensitive company. We did get some mixed news today. Waymo and Uber partnering. You did get some EPS estimate downgrades and some Q3 delivery downgrades from Guggenheim, right? Canaccord Genuity. So there was some mixed news today for Tesla. I think if this was a no news day, Tesla would have been up a lot. Okay. So when I say the areas of the markets that, you know, will benefit a lot from a bullish market, from a soft landing, from a dovish Fed potentially coming next week, you know, would be what did well on Friday. Tesla didn't do that well. It was only up 0.21%. It was still in the green, but not up that much. I think Tesla will be included in that. I think Tesla will do very well. And I mean, I would not be concerned from that front at all. Tesla is probably the most interest rate sensitive company out there. period. And I mean, just look at Tesla stock. As I said at the beginning of this video, Tesla's chart looks absolutely gorgeous. Now, we do have that October 10th Robotaxi event coming up, and I don't think that's priced into Tesla. Right. I think Tesla stock could rally probably to about $300 per share before we really have to worry about the Robotaxi event being a sell the news event. I don't think that's going to be a sell the news event, as Tesla stock's $230 per share. Now, again, if Tesla's $300 per share, perhaps it could be a sell the news event. But from my perspective right here, if next week turns out to be a bullish event for markets, again, you want to see a strong economy, you want to see a bullish Fed, bullish in terms of soft landing, no recession, getting back to neutral, then Tesla stock and small caps, value, dividends, cyclicals, biopharma, right? Heavily indebted companies, you can include them in there. We'll all see a very short-term rally. Now, again, I do think history would suggest that you're probably going to see a sell the news event. Again, you've already kind of seen markets price in to some degree that soft landing, that bullish Fed. On Friday, you've seen that for a couple of days now. So from even that perspective, I do think a sell the news event in the short term makes a lot of sense. But after the Fed starts cutting rates, it's all about the economy. And I think economic data will be heavily scrutinized. Every single piece of it. Retail sales, consumer spending reports, CPI reports, in the sense of if CPI comes in too low, that's a bad sign. If CPI comes in, higher, that's actually a good sign for economic activity. GDP reports, right? All of these barometers of the economy, let's call it that, will be the thing that drives markets higher or lower over the next couple of months. Now, we also have the election coming up. It would not surprise me, and this is kind of what I'm starting to lean towards, if we get some of your election fears coming into markets at the same time next week as we potentially get a sell the news event. It wouldn't surprise me if we get, let's say, a 10% correction over the next couple of weeks, and also get that election correction, right? So you get a sell the news correction, you also get an election correction, it rolls into a 10%, let's say, correction, okay? That wouldn't surprise me, and I think that actually makes a lot of sense. Instead of seeing this 5%, 10% down move for the Fed, markets rally back, you see another correction for the election. I don't think we're going to see that just back-to-back volatility. I do think markets are kind of starting to price in some of that election risk now. With that said, let's put some probabilities on this. I think there's a 70% chance markets sell the news next week and markets move lower. Tesla stock moves lower, basically everything moves lower. I think there's a 30% chance that we get an outright bullish event next week. 50 basis point cut, seen as good news. The Fed's dot plot, which I didn't mention until now, comes in really good. That would be the GDP coming in, around 2%, the same as last estimate, maybe as low as 1.5%, but not lower than that. The unemployment rate coming in below 4.5%. I think if the Fed projects a 2025 unemployment rate at 4.5%, that could be seen as a little bit more weakening, not recessionary, right? And the last estimate the Fed had was 4.2% for unemployment in 2025. We're already there, right? The unemployment rate is 4.22%. So we're already there. The Fed's going to raise these estimates for unemployment. Just how high, right? And that's part of the whole, is the Fed dovish or hawkish on the economy? If Powell is hawkish on the economy and he sounds like maybe he's telling us there's a recession coming, the unemployment rate is going to be projected to be around 5%, right? Federal funds rate, that's also important to a lesser extent, though. I think GDP is important and the unemployment rate is the most important. The federal funds rate projections, they're so volatile. They change with each data point that comes out. So I don't think that's as big of a focal point for next week. But yes, the summary of economic projections, that's going to do a lot to markets. But again, I think there's a 30% chance we do get this bullish Powell, this bullish dot plot, 50 basis point cut that is seen as good news by the markets, and Tesla stock probably makes a run to about $300 per share. Could be even more aggressive than that if we start to get some hype built in around the Robotaxi event. There's a 70% chance, though, we sell off, in my personal opinion. What that sell-off could bring is probably Tesla stock to about 200 or 180. Between 180 and 200 would be my expectation, because I think there is still some hype around the robotaxi event, regardless of what the Fed says. I think, there's going to be some people that want to own Tesla for that event in and of itself. And yeah, we're getting a cut regardless. And that's going to benefit Tesla to some degree, whether that is immediately or not. I think immediately, time will tell if that boosts demand for Tesla. But I do think there's reasons to believe this is only going to be a correction. Could send Tesla back to the 180s, 200s, more of a base case scenario for me. Whether or not we end up falling more than that comes down to what happens in the economy. And this is going to be something that's ongoing for many months. Okay, so that's kind of the bear case scenario. Bull case scenario is a run well into at least the 300s, right? Maybe up to 310, 320 could be a pretty important level. You do have some resistance here, likely around 315. That could definitely be possible. And Tesla stock just looks really good on the charts. Okay, let's also acknowledge that. So not all hope is lost heading into next week, but the odds, I think, are stacked against us for a large upside move at this point. That's my honest opinion. You come here for honesty. You come here for the no bullshit breakdowns. And that's my no bullshit breakdown for today. Let me know what you think about this information down below in the comments section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.